Welcome back to the Tesla Daily News podcast for Sunday, December 14th, 2025. I'm your host, and today we're breaking down the latest events impacting Tesla's business, stock performance, and future growth. In the next 10 minutes, we'll cover several stories with major implications for Tesla investors. We'll talk about the surprising downturn in U.S. Tesla sales, major factory milestones out of Shanghai, Tesla's latest tech partnerships, and how global competition is heating up. Plus, some fun, or maybe questionable, updates from Tesla's lifestyle brand. Let's help you make sense of the headlines and what they mean for Tesla stock. First up, Tesla's U.S. sales have dropped to the lowest monthly level in almost 4 years, despite new cheaper Model 3 and Model Y variants. Let's unpack why. According to Cox Automotive, Tesla delivered an estimated 39,800 vehicles in November, which is down almost 23% year-over-year and represents the weakest monthly total since January 2022. This slump is happening even as Tesla launched lower-priced models in a bid to stimulate demand. Key reasons? The fading federal tax credit, rising competitive EV launches, and a broader slowdown in electric vehicle adoption across the U.S. market. For context, new Model 3 Standard makes its price start around $37,000, and yet the uptake isn't enough to counter broader headwinds. Investors are keeping a close eye on inventory buildup, price cuts, and possible margin compression. Bottom line, if demand stays weak, it could impact Tesla's fourth quarter revenue and spark concern about hitting annual delivery targets, putting pressure on the stock. While U.S. demand falters, Tesla's international story looks very different, especially in China. At Gigafactory Shanghai, Tesla just celebrated producing its 4 millionth vehicle. That's an astonishing pace. The factory took just over 6 years, and each millionth milestone has come faster than the last. Shanghai is now Tesla's most productive plant, regularly exporting vehicles to markets like Australia, Europe, and Southeast Asia. In fact, a recent report notes that all Model 3 and Model Y allocations for Taiwan are already sold out for the quarter, and new buyers must wait until next year for deliveries. For shareholders, Shanghai's strength highlights Tesla's geographic diversification and global scale. With slowing U.S. sales, Shanghai's performance is a powerful counterbalance and contributes significantly to Tesla's overall delivery numbers and production efficiency. Next, an important competitive update. Nissan has unveiled the NX8, a direct challenger to the Tesla Model Y, boasting ultra-fast charging and a full EV and plug-in hybrid lineup in China. Nissan's move is part of an ongoing intensification of competition in Tesla's core crossover segment, particularly from legacy automakers and Chinese EV brands. The NX8's debut comes with bold specs, including state-of-the-art interior tech, aiming to win over value-focused buyers. For Tesla investors, the message is clear. The Model Y is facing more pressure, and Tesla must maintain its pace of software improvements, battery advances, and value proposition to defend market share as new credible entrants hit the floor. Let's turn to Tesla's technology supply chain. Samsung's chairman recently met with Elon Musk to discuss the expansion of chip production for Tesla's next-generation AI hardware. Samsung is now producing both AI5 and AI6 chips, critical for features like full self-driving and in-cabin intelligence. What's new is that Musk is taking a more hands-on approach, reportedly setting up a dedicated office in Samsung's Texas facility to oversee processes directly. Tighter integration between Tesla and Samsung may help Tesla overcome some past supply chain disruptions and potentially accelerate AI development. For investors, this partnership further underlines Tesla's ambition to control its semiconductor pipeline, a strategic move with implications for autonomy, cost, and future product launches. Speaking of investor sentiment, Tesla's stock has been riding high in recent sessions, but there's a twist. Kimball Musk, Elon's brother and a Tesla board member, just sold more than $25 million worth of stock as Tesla surged past $450 a share. Insider selling always draws attention, especially with Tesla's valuation back near yearly highs. While individual sales don't necessarily signal problems, they can spur debate about near-term stock direction and how management views the current valuation. Investors should keep watching for any patterns in executive selling, especially ahead of year-end or big announcements. And now a lighter, but revealing story. Tesla just launched a $350 pickleball paddle, teaming up with Selkirk for a premium sporting goods push. It's not electric, but it's optimized for high-performance play, and it follows a string of lifestyle products from Tesla, from flamethrowers to tequila. While these moves generate buzz and sometimes controversy, the revenue impact remains trivial next to the car and energy businesses. Still, they're a reminder of Tesla's unique approach to brand building and the loyalty and spending of its devoted fan base. Wrapping up today's show, Tesla's facing demand bumps in the US, but hitting production highs in China, while competition and partnerships are intensifying globally. For Tesla stockholders, the key theme is volatility, from sales and margins to surprise stock sales and new competitors. Keep watch this week for December delivery updates, possible year-end incentive programs, and more news from Tesla's global operations. If you want clear, data-driven Tesla news every day, subscribe to the Tesla Daily News podcast and join us tomorrow for more insights that matter for your investments.